Hello and welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi Batra, and on this show, we give you an update of how the markets have been trading so far and what's the outlook that the market experts have on the markets and what should be investor strategy going on from here. Joining us is a very special guest today. Ms. Likita Chepa joins in from Capital Bio Global Research. Likita, thank you very much for joining us on this special show. Let me just begin by understanding from you, first day of FY22 so far, the markets are still holding on to the green tick that they had opened up with. What is your outlook on the markets for today and for this entire year? And how are you, advising your clients and all the viewers of Money9? What would you say to them? How should they be positioning their strategies?
So first of all, a very good afternoon to all of you, and thank you for having me on this show. So Nifty has given a spectacular rally in the last year, in the last financial year of FY21. But for FY22, although the outlook seems to be constructive, we are expecting a modest growth, a higher single-digit growth in the Nifty. So in this week, we have seen Nifty trying to reclaim its strength in the last couple of trading sessions, but due to profit booking at higher levels, it is not able to resume its upward trend. So 14,300 to 15,100 would be the range where Nifty would consolidate for next couple of sessions before actually starting its rally.
But I want to ask you, in FY21 so far, of course, the stimulus measures by the governments, by RBI, the extreme amount of inflow that we have seen in from FIIs, all of those factors have really supported the markets and the rally that we have seen so far. But going in from here, with keeping in mind that there is an expectation of economic recovery coming into place, how should investors be looking at the markets and their performance? What will be the factors that will, impact the market performance?
I would say that for the next couple of quarters, more weightage would be on how corporates have been able to use these measures, how they were able to capitalize on them. So much of their portion would rely on the corporate earnings in the next 2 quarters, I would say. So if companies come up with good quarter numbers, then the level of 15,500 for Nifty is really not so far, and maybe we can see it by June end if firms come up with good numbers.
Okay. And what are you advising your clients right now? All of those clients who are already sitting on big bank profits, we've seen 70% uptick for the benchmark indices, mid cap, small caps also outperforming the markets. So all those investors who are sitting on good profits, what are you suggesting to them? All those investors who would now want to begin afresh in the markets, what would be your suggestion to them also?
So clients who already are at good profits should actually consider booking their profits, not complete profits, but then they can consider booking partial profits and try to rebalance their portfolio, try in different stocks, different sectors, and different asset classes also. They should not just stick to equity as such. So rebalancing is very much required now because see, investors overall globally are considered regarding the valuations, and by far I think this is the right time to book profits and search new stocks which are actually undervalued. And for fresh investors who have not made any position, as far as I'm considered, I think investors should wait until Nifty gives a decisive breakout above the level of 15,100. That is where one can get confirmation that Nifty is going to resume its upward trend, and then you might find an opportunity. But
Okay.
still, if someone is really interested to invest into banking or something, Nifty PSU is kind of forming a reversal pattern. So that is a space wherein you can actually find stocks and buy from their support levels.
So let's come to the stock recommendations now. That's what most of the investors will be interested in watching because, in FY22, already we've seen some of the stocks really reaching sky high valuations. So it's going to be extremely difficult for them to really understand which stock is going to also outperform, say, in financial year 2022. So which are the stocks that you're focused on and what are the targets also that you're looking at these stocks that you've picked out for Money9 viewers today?
So our first suggestion for investors would be do not pick stocks from their all-time highs or really at higher price levels. Instead, search for stocks which have undergone significant amount of correction and try to pick them from their support levels. So first recommendation would be Jubilant Food. So this stock has witnessed significant amount of correction in the past weeks, and it is forming higher lows for 3 consecutive weeks. It has delivered a good profit growth of above 20%, and ROE has also been above 20% for the last 3 years. Sales growth has also been consistent. So we are expecting a target of 3650 in the next 15 months for this stock.
Okay, 3650 on Jubilant Foodworks is expected over the next 6 to 12 months. So that is something that you can look to add to your portfolio. Other than this, which was your second recommendation for the day?
Second recommendation would be Avenue Supermarts Limited, which is DMart. With economic activities returning back to normalcy, this I think this DMart is completely positioned well, operationally and financially also to reap the benefits because it has a diverse product portfolio and has highest number of outlets. So this stock is also looking good and its prospects are quite positive for the next 12 to 14 months. We're expecting a target of 3450.
Okay, 3450 is the target for which Likita really expects on Avenue Supermarts going on from here over the next 1 year. So that is something that you can look to add from the retail space to your portfolio. So far, casual dining chain covered and retail space covered. Which is the third stock and which sector is it from?
With demand coming back to the pre-COVID levels, we are expecting the auto sector and auto ancillary sectors to perform really well in the coming quarters because somewhere or the other this has been underperforming in comparison to other sectors. So
Right.
endurance would be a stock which is in a consolidation phase for quite trading sessions now. So any upward breakout in the stock would lead to bullish movement. It has a consistent growth in net profit and operating cash flow has also been consistent in the past few quarters. So this stock we recommend for the next 12 to 15 months with a target of 1830.
Okay, 1830 is the target on Endurance Technologies. Thank you very much, Likita, for joining us on this special show and sharing your views on the markets and the stock recommendations that you've shared for our viewers for today. Thank you very much. It's been a pleasure speaking to you. Let's go on and see how the markets are trading at this point in time. Remember, we had a gap up opening in the morning, and although there was some bit of volatility, we also dipped towards the lows of the day. But now, if you see, the markets are still holding on to some bit of gains, 0.6% of an uptake. But so far, the opening and the current levels are almost similar. 49,836, that's the level at which the Sensex is trading at. Talk about the Nifty 50, 14,806, that's where it is trading at with 115 points addition to that kitty. When you talk about Nifty Bank, that's also holding up with 0.5% gains at the moment. The broader market indices clearly outperforming even now the small cap index with 1.5% gains and almost 1% uptake for the BSE mid cap also. So with that, we wrap up this edition of Market Meter for you. Whole lot on the other side with respect to market coverage and on personal finance front as well.